on to our last session. Can I ask Donna to join me on the floor, please? Guys, so Donna Pretorius is one of the co-founders at Outsource CFO, and he's also the director in charge of strategy and fundraising. As I think it was also Hans who mentioned earlier, like if an entrepreneur team want to pitch for capital, they must be crystal clear in terms of their strategy as to, why are they raising, where are they going, what are they doing, what are they not doing, etc. So we asked Donna this question, being a master of fundraising and of strategy, like how does a founder team or a management team put that strategy for fundraising into action, and how do they present that? So Donna, over to you for this last interesting session of the day.
Thank you so much, Lo. I hope everyone's still strong. And if you don't mind, I'm going to share my screen for this presentation. Perfect. So, ladies and gentlemen, it's my privilege to end off with a little bit more on strategy to get funding ready. I'm going to take you through some strategy considerations for that. Like Lo has mentioned, I am a co-founder and director of Outsource CFO. Some of my strengths are that I'm very strategic, very futuristic, and I really enjoy developing people. So I'm very privileged at Outsource CFO to really help our clients with strategic direction, as well as to help our clients with fundraising. So just very interesting. I did a previous talk at the previous FundRaise conference on the 7 steps to being funding ready. And I thought, let me give it a different spin this time around and rather focus on some strategy considerations to get funding ready. So at Outsource CFO, we like to focus on every business has the hierarchy of financial needs. You'll see there from levels 1 to 7. At level 7 is the strategic direction. Typically, your fundraising strategic considerations falls within that element, but it's super important as a business to have elements 1 to 6 in place when considering to raise funding from a strategic point of view, because that could just prohibit an uncontrolled expansion, which wouldn't help your investor and wouldn't help you as a business. So very important to build your house, your business, your financial function, considering this level 1 to 6, and and then obviously the strategic fundraising elements to be considered under element number 7. So for a lot of our clients, we help with strategy, we help with fundraising. We recommend a book written by Vern Harnisch called Scaling Up. I believe a lot of you in the audience are familiar with this book. It's an amazing book. Very interesting. Some elements in this book talks about 3 barriers for scaling up. Why is these barriers important? Obviously, when an investor is looking at your business considering investment, they're obviously going to see, are you addressing some of these typical barriers? So these 3 barriers are typically, like, from a leadership point of view, you struggle to either upskill and appoint the necessary leadership that can take your business to the next level. From an infrastructure point of view, your infrastructure might be inferior or not able to handle the volume, the mass, the growth, the scalability that's required to take your business to the next level. And then from a marketing point of view, a lot of businesses struggle to penetrate the market, even after they've received funding, to not hit the right avenues. So I would say from a strategic point of view, definitely address these elements in your leadership, your infrastructure, and your marketing campaigns to be as attractive as possible for investors. To the top half of this page, this is a very exciting strategy exercise we do with our clients. We always start with the core values. If your team is not aligned with core values, don't even try and raise funding for business. Your culture trumps strategy. So your team needs to be aligned in what your values are. It will help you to decipher and decide who's the right fit investor, who's aligned with your values, that need to walk this journey with you. And then in the center of the page, you obviously got your BHAG and your big, hairy, audacious goal. It's important that as a business, you know where you want to go, and that you don't have an uncontrolled expansion. That everyone is on board from a strategic point of view. And that will obviously help you from a strategic priorities to filter it down even to a quarterly basis. So let's say you're a business owner and you're considering to raise funding, or at least from a strategic point of view, start thinking about future fundraisers. I would always start with your business model, not reinventing the wheel, but getting all your the different department managers in-house, look at all the building blocks to your business model, look at it, ask where, if you were to give in $1 million now, where would you expand? Where would the opportunities be? Just brainstorm with everyone, give everyone's input. Also see where the areas are where you're going to struggle, where that scalable infrastructure is not going to help you to grow, and just highlight that. Another great exercise to do from a strategic point of view is to do some competitor analysis. Go and find an competitor that's 3 or 4 years like before you, or have walked that journey before. Reverse engineer what they've done. Look who has invested in them, and try and learn from them from a competitor point of view. Just some of your strategy considerations there. So just to add on to the steps to being funding ready, a lot of this has been mentioned. So and there's a detailed YouTube video on this as well. So I'm just going to quickly touch base on that. Everyone knows, stating the obvious, building a great business, very important, building a great team. Make sure that, from a strategic point of view, that the buyers and the team composition is very strong. Like Hans has mentioned, relationships, people, relationships. So that is so important from a team element. I also like someone else mentioning that you've got a dedicated one of the founders also that drives the fundraise drive, so that that there's not too many chefs in the kitchen. The second element is building a great value proposition, and very important to be able to tell your value proposition, your story to an interested investor. Very simplistically, they have a short attention span, and just that storytelling element, you need to solve a real world problem. And cash is king. Don't raise funding when you're in a cash-strapped position, because the bargaining power might not be in your court. So just consider how you are or managing your current cash flow. Then I'm going to focus a little bit more on your clear expansion strategy and some considerations on that. So building a business is almost like climbing Mount Everest. You need to see where your aim is and where you want to go, where you want to grow your business, and you might need to see where you currently are, and you might still be at a base camp or so. So a great way of looking at it is sitting with your team, asking yourself, end in mind, from a strategic point of view, what do we want to achieve? What does our Mount Everest peak look like? And after how many years do we want to achieve it? And make sure that you and the team is aligned with that. That will enable you to reverse engineer different milestones. Say, listen, what do we need to achieve? Where do we need to be at in 3 to 5 years' time? And then that will really help you to drill it down into quarterly goals, to yearly, annual goals, as well as quarterly goals. So again, a great exercise to do for you as a business owner. Another strategic element to fundraising is some entrepreneurs don't know what the opportunities are in their own business and the fundraising opportunities. That's where we like to go back one step under profit and cash maximization, where we help our clients. We typically look at something called the power of one and the 7 levers. So the power of 1 and 7 levers is an amazing tool to use. It's almost like if you were to spend 1%, improve 1% in a certain avenue of your business, where will the maximum benefit be for your business? What will the effect be on your cash flow? What will be the effect be on your earnings, your profitability? And it might be you need to ramp up your volume, penetrating the market. It might be that you need to look at more profitable gross profit margin product lines, or just looking at the way are you recovering cash at your working capital area. Brilliant exercise to do. Where you basically populate it with your existing balance sheet information. And then to the right of the screen, you see all the 1% toggle keys that you can see. What will happen if I were to increase the price, the volume, etc. And then to the right, it kicks out the effect on cash flow and earnings before interest and tax. Very important tool, especially for entrepreneurs that want to build a business and have maximum valuation at the end. Understand the variables that will determine the valuation at the end. Then know what variables is in your control and what areas you need to focus on. You know, for instance, someone with the EBITDA multiple know that they need to also can't just penetrate the market. They almost consider cost cutting as well. Or people with the sales multiple valuable know that they need to focus on penetrating the market with getting that sales volume increase, etc. Just a few considerations for that. So having a clear expansion strategy is super important. Know what the opportunity is in your business, anything from a new equipment or new that can increase your production capacity, new IP licenses that you have, might be a marketing campaign or anything like that for you to penetrate the market. So that's from an investment decision. Remember, investor wants to know what will typically be the return on this asset. Are you sweating it? Will you be able to justify investing in it? And the second consideration is obviously the financing decision. How are you going to finance it? Is it better to get debt? Is it better to get equity? If it's debt, should it be short-term of nature, long-term of nature? And would you be able to justify the interest rate? And obviously the strength of your business from a solvency point of view. So that's just a few considerations from your expansion strategy. Moving on, a lot of the last few points have been mentioned, so I won't focus too much time on that. I'll just quickly move through that. A clearly defined financial model. What I'll add to that from what Calvin has mentioned is make sure that your expansion strategy has been incorporated in your financial model, and that what Jog also mentions, the ROI. Investor wants to be able to see this would have been your business that has grown organically. This is how it would look if they would have come in from a point of view, and this is typically the returns that they can expect post investment. Then understanding the valuation of your business, like I've mentioned a little bit later, is see how you can tweak the variables or focus on the variables as a founder from a strategic point of view to maximize your valuation if that's a route that you're aiming for. Then under the nail, the diligence, I won't elaborate too much on that. Leanne has nicely focused on that. What I can mention is just be on the lookout for the deal breakers. Deal breakers include non-reliable financials, not being compliant, tax compliant, for instance, not having a strong team, or even something like an uncontrolled expansion, which is too aggressive and it could result in the investor backs out, as well as a few other considerations. Then a little bit more focus on deal crafting, some strategy considerations with deal crafting. I've heard a few great considerations with that. What I like here with deal crafting is relationships really matter. So if you have found a mandate fit investor that you are very eager that they invest in you, go and see if you can find some of the other businesses that they've invested in. Ask some of those businesses if they would be so kind to make introductions for you, because they already have a relationship with these investors. And then it's almost like when you have start building up a relationship with the investor. It's not you shouldn't just send them a pitch deck and hope you're going to get funding in the next week or so. It starts over time. If you're considering to raise funding from a specific investor over 3 years from now, try and make contact with them at a networking event, that they're aware of you, make sure that they're following your newsletters, send them updates of excitement, growth opportunities, what's happening, etc. So you are building a relationship with them up at that stage where you're ready to pitch. Then you have to really already have that chemistry and a relationship with them. There's obviously the art of making the deal crafting is obviously very specific. There's a lot of matter experts that's very equipped in that. I think as a business owner, as a founder, you need to almost like equip yourself as well. You need to be able to navigate that in the boardroom. Some considerations here, which quite obviously is not to discuss value too soon. And difficult to backpedal after you discuss value. Ask for those term sheets from the investors. Don't only talk to one investor, trying to get a few investors that you're having discussions with, really see what are they coming to the table, and just have that value of choice. And I think what is important to mention here is, raising funding is not a financial exercise. It's more a marketing exercise. So really have, like Hans has mentioned, have an amazing pitch. And the guy's attention span is very short. Make sure that you have a great story to tell, and that the guys are really interested in you. And approach investors with a mandate fit as well, and really see and ask yourself what's important for them. be flexible, and as an entrepreneur, make sure that you see the journey through till the end, up until money's in the bank, and just some strong say. That's the last consideration is just have an amazing pitch deck when pitching to funding. Yeah, and that's basically from me on some strategy considerations to being funding ready.
Hey, Lo here, one of the founders of Outsource CFO. If you enjoyed this video, make it official. Click subscribe.